Hi everybody, this is Lara from PureElliottWave.com. I'm going to analyse XVG or Verge with you today. If you're a regular viewer and you've already seen this, my explanation of this upcoming event, I've got chapters, skip through, jump into the Verge analysis. If you haven't seen this and you're not aware of this, I'm a part of a presentation tomorrow, 17th of August. You've got less than a day to register now. This presentation from FX Traders Edge is hosted by Jodie Samuels, and there are in total, including Jodie, there are 7 of us presenting, each of us giving you an hour of our analysis. I'll be presenting at 3 p.m. At the end of our presentations, we've all got some free stuff to give you. If you're not able to view the presentations at these particular times, if you're registered, you'll get a link emailed to you so that you can click on that link and view the presentations afterwards. So it's in your best interest to register, because we're going to be giving you a lot of free stuff. Not only an hour of our time, but everyone's going to be giving you free stuff. I'm going to be giving everyone who's registered 1 free month's access to my Pure Elliott Wave Weekly. That's where I analyse these markets every week. I analyse Bitcoin on Monday, and then at the end of the week I'm analysing S&P 500, gold and US oil after New York's closed. I'm also going to be giving you a free download of my ebook, Pure Elliott Wave. My rules are the same as Frost and Prechter, and I've written my book to be as clear and explicit as possible. I want it to be the definitive guide to learning and using Elliott Wave. And one person who registers from my link will go in the draw to win 1 free lifetime access of my Learn Pure Elliott Wave online course, 20 lessons, and some absolutely unique learning materials. A lot of them have got quizzes, and you've got me supporting you via email in your learning Elliott Wave journey. So that's what we've got for you. You need to register though, and the link is in the description box below this video. Okay, let's jump into Verge. First of all, I need to view this on a semi-log scale, or it's just not going to make sense. Let's start out at the weekly chart level. Interesting, it started out here and it made a high here. What was this high? 30 cents. It's pretty cheap, isn't it? And then it goes to make new all-time lows. The low here under 1 cent, and then another impulse up here, and then another huge move down. I think I need to start my wave count from here, but I'm also going to actually consider an alternate where I'd be looking at A, B, C to continue lower. So I'm going to do 2 wave counts with you today. I'm going to do the bearish one first. Yeah, because that's what I see. It doesn't mean this is right though. Let's see, what degree would we have this? I'd give this probably, cycle. I've had a very brief look at the technical analysis, and I think it supports the view that there could be a sustainable low in place, but I won't know until I really get into it. I want to consider all possibilities though, and not get hung up on just a bullish wave count. No, we're going to put this here. I think I might have to put this up here. Is there a lot of overlap in there? No, I think this is probably here. No, I think I'm going to have this up here like this, and then this here like this. That third wave doesn't look so good, does it? That doesn't look like a good third wave at all. I think this movement probably actually is going to fit best as a corrective movement, not a 5-wave impulse. So I don't like the look of that at all. Do not like. Let's have another go. Now before I get into that, I want to see if this actually fits better as a correction. I'm not too sure about the degree though, but let's just leave it at primary for now. So I think this actually looks best. Yeah, this looks best as a zigzag. So that means if this is a counter trend movement, the larger trend for Verge should be up. This is going to subdivide beautifully, this 5-wave impulse. Well, that was a handy exercise actually. It's not definitive, I could be wrong. This downward movement could actually fit as an impulse, but let's bring in MACD to help with the wave count. Where are we? Yeah, 3rd wave. Yeah, strongest momentum. I know that C is short in relation to A. That's okay. They don't have to be equal in length. They just are commonly equal in length. But A subdivides as good as a 5, and here on this chart, this just does not look very good as an impulse from this high to this low. I'm going to go with this. I know that this upward movement here looks quite like a 3, but I've got no problem whatsoever in seeing this as a 5 because I'm very used to cryptocurrencies and commodities. I'm used to this from commodities. I've been analysing gold for a long time, very regularly. The fourth wave is often more brief and shallow than the counterpart's second wave, and that's because in the third wave there's a fifth wave impulse, which forces the fourth wave just before and just after it to be more brief and shallow than it would otherwise be. And it gives an impulse sometimes a curved look. Oh, is this actually going to subdivide very, very well indeed? Oh, it is indeed. That is nice. I like it. This looks like a double zigzag. That's what I'm going to cover in my presentation tomorrow actually, extended fifth waves, how they commonly occur in a third wave position 1 degree higher. So this fifth wave at intermediate degree is extended, and it's a fifth wave to end a third wave impulse 1 degree higher. Look at the wavelengths. Intermediate 1, 0.006942, intermediate 3, many multiples, 0.023318, and intermediate 5, longer than 3, 0.063408. The profit is in the fifth wave. Well, the profit's in the third wave as well, but you're going to get even more profit in the fifth wave. So what does that mean for your investing in cryptocurrencies, specifically Bitcoin? That's what I'll be looking at in that presentation tomorrow. I spent all weekend preparing material for it. I don't know about this. I even sacrificed a day of surfing. That's okay. I got it in today. What an amazing session. Glassy, 3 foot, beautiful healing long waves, nice steep walls. Oh, so much fun. I'm so happy. Yeah. 2, some kind of combination maybe. Why is that not sitting on the high? That's better. I think that's pretty good. Do we want to spend time on C checking the subdivisions? I think no. No, we don't. So B's a running contracting triangle that meets the rules, although I'm not totally happy about the AC trend line not having too much of a slope, but that's okay. It meets rules and it does have a slope. E ends pretty much on the trend line. Okay, so this one could be in early stages of the third wave up. Let's have a look at some technical analysis. Here's a chart I kind of prepared earlier, or at least I've done support and resistance. Let's look at the weekly chart, and the first thing I noticed is RSI just down here, week beginning 12th of June, looks like it's just reached oversold for the very first time ever in the price history of this particular market. That's bullish. That tells me that this downward trend reached an extreme level. Even though ADX didn't tell us the downward trend was extreme, conditions were extremely oversold, more so than they've ever been before. What about the volume profile? Let's have a look off this low first and have a look and see how did it behave off that low. Oh, well, first of all, actually candlestick patterns. No bullish candlestick pattern here. What's volume doing? Pretty weak off that low. Starts out slowly. It's not until it gets into several weeks after the low that we start to see volume pushing price higher. Price drifts lower on light and declining volume, and then volume pushes price higher. A little bit of bearish divergence at that high. The final upward week had weaker volume than the week 3 weeks prior. Okay, what's it doing now at this last low? Possibly a piercing pattern, a bullish candlestick reversal pattern on the weekly chart off the low. Does it have support from volume? 18.2 million, previous 19.1. No, it does not have support from volume. Volume is light, very light. Let's extend this out so I can look at this a little bit more clearly. There is a little bit of push from volume in the last 3 weeks, pushing price higher just a little bit, but volume's pretty light and overall declining after that low. We've seen that before though, it doesn't mean that low can't be sustained. On balance, volume did not make new lows with price. Here's some bullish divergence. The closing price here, 0.009598, and the close here, 0.002734, price has closed lower. On balance volume, corresponding points have not made corresponding lows. That's bullish divergence at the weekly chart level. Down at this low, ADX did not indicate a downward trend. It hadn't caught up. It's a lagging indicator. It hadn't caught up throughout the bear market. It's now indicating a downward trend in a very early stage. This is a really bearish signal from ADX. It's a lagging indicator though here, and it's based on a 14-week average. Yeah, RSI does look like it did reach oversold at the low. I'd read that as bullish. I'm going to give more weight to this than ADX because this is the first time in the price history that RSI has done that. Bullish divergence between price and money flow index as well. Stochastics was oversold, moving into neutral territory, and ATR declining to the low and continuing to decline after the low. That's okay, seen that before at a prior sustainable low. Let's take a look now at the daily chart level. At the daily chart level, there is possibly a hammer candlestick in this candlestick here. Let me quickly calculate the real body. No, the lower wick is not twice the length of the real body, so that's not a hammer candlestick pattern, but there are two bullish long lower wicks. So no bullish reversal pattern at the low, the last one, but there are bullish long lower wicks. Wow, volume showed a huge increase a couple of days, or on the third day after the low. That's bullish. Within this movement up until this day, we're seeing volume showing more support for upward sessions than downwards. This session here, not quite a gravestone doji because the little line of the real body isn't toward the low, but it has a bearish upper wick. So this is a long-legged doji at a high. This is bearish and it has pushed from volume. It's an outside session though, higher high, higher low, more upward movement than downward because the high is much higher than the low is lower, but it's almost got, well, it's a doji, so it's just really hard to read. Was there more up volume or down volume within that session? Impossible to tell. I'm going to say I can't say we should make an assumption. I don't want to do that. So I can't tell you if this volume is bullish or bearish. And so I think it's best until we have further evidence to not give that weight because this is a doji. Okay. On balance volume, moving higher with price, that's good to see. Doesn't look like there's any bullish divergence at the low. ADX at the daily chart level is now indicating there's an upward trend. Down here it gave a very strong bullish signal, so the weekly chart's giving a bearish signal, the daily chart's giving a bullish signal. If they were both in alignment, I'd have great confidence, but they're not. They're disagreeing with each other. For the short term, we can tell that there is an upward trend. The weekly chart level, I'd give more weight to RSI in the weekly chart again than I would to ADX. At the daily chart level, there is an upward trend in place. There's quite a long way to go before it becomes extreme. At the low, there was RSI reached oversold, and there is bullish divergence from this point to this point on a closing basis for price, and this point to this point on RSI. Price has closed lower, but RSI has failed to make a corresponding low. So that's short-term bullish divergence and longer-term bullish divergence. So there's double bullish divergence at the daily chart level, and RSI reached oversold at the weekly chart level. I will read that as quite bullish. Money flow index, also very strong bullish divergence at the low. Stochastics, a little bit of bullish divergence, now in neutral territory. ATR off that low, declining. There's weakness off that low. That's okay, we've seen that before. It is entirely possible that this Elliott wave count is correct, that Verge has found a low. That would be my analysis. I would really hesitate to calculate a target, but I'm going to have a go at it. This is highly provisional. My target is highly provisional. I'm going to use an extreme Fibonacci ratio because these markets, if they do exhibit Fibonacci ratios, they tend to be very extreme. If cycle 3 reaches 11.06 times the length of cycle 1, a target would be 0.9237. This is highly provisional, and if it's wrong, it's not going to be high enough. I noticed for cryptocurrencies, their third waves are often 15 or more times the length of the previous third wave at the same degree. So this target provisional and probably too low. So about $1, probably over $1 for the third wave up for this market. Thank you so much for watching. If you got this far, if you haven't registered for that event tomorrow, you've got less than 24 hours to do so. For those of you who have registered, I'm really looking forward to it. I'm going to do some more preparation today, and I hope you really enjoy it. I've got some, I think, really cool stuff coming for you tomorrow. Thank you.